significant decrease in the market value of an asset, that can be considered as one of the indicators for impairment. Then most important one, if there is any technological changes, nothing but if the asset is exposed to any technological changes, then that is also one reason for impairment. Then if there is any changes in the legal or economic environment, if there is any change in the legal or economic environment, or if the asset become obsolete, and if the asset is the method or nothing but the usage of the asset is changed, now that can also be considered as an indicator for impairment. So for a better understanding on the indicators of impairment, so here you can see this operating and operating losses, technological advancement, obsolescence and physical damage. Now let me give a best example for operating. Suppose if an entity from the last 5 years, the company is getting operating losses. Now, definitely these operating losses can be assumed as an indicator for impairment, because if the company is in losses, then definitely its assets recoverable value will be significantly affected. And technological advancement. Suppose if an entity is working under an environment where continuous technological advancements are possible. Suppose if you take this telecommunication. Now, this particular area of business is working under an environment where continuous development is possible. Now, if there is any change in the technology, definitely that can be a reason for indicator. Nothing but impairment. And the last one, I hope I don't think I need to give an explanation. If the asset become obsolete or physical damage. So if there is any physical damage to the asset, then it can be considered as a indicator for impairment. So the impairment loss. Now here, what is the impairment loss? The difference between the carrying amount and recoverable amount. Suppose if the carrying amount of an asset is 1 lakh and if its recoverable value is 80,000, the difference 20,000 is considered as impairment loss, and this particular impairment loss we accounted in the statement of profit or loss. So this particular impairment loss will be showing in the statement of profit or loss. Then suppose if you got an impairment loss on any asset which we revalued in the previous year. Suppose in 2020 an asset was revalued and we got a revaluation surplus of 20,000. I want everyone to please focus on my example. In 2020 an asset was revalued and we got a revaluation surplus of 20,000. Then the current year, the same asset was impaired and we got an impairment loss of 30,000. So instead of showing total 30,000 in the statement of profit or loss as impairment loss, we need to adjust that 20,000 and the remaining 10,000 will be accounting. I hope you understood this. If an asset is revalued in the previous year, then this impairment loss will be adjusted with that particular revaluation surplus and the remaining amount we charge it as a expense. So any query participants on this? Is it clear? Yes. Yeah. So we'll do a small illustration from impairment. Yeah. So can you see my Word document? So here Relay acquired a non-current asset on 1st October 2009 at a cost of $1 lakh, which had a useful life of 10 years and nil residual value. The asset had been correctly depreciated up to 30th September 2004. At that date, the asset was damaged and impairment review was performed. On 30th September 2004, a fair value of the asset less cost to sell was 30,000 and expected future cash flows were 8,500 per annum for the next 5 years. So the current cost of capital is 10% and a 5-year annuity of 1 per annum at 10% would be 3.79. So the requirement is what amount would be charged to profit or loss for the impairment of this asset for the year ended 30th September 2004. So here we need to calculate the impairment loss which we will be presenting in the statement of profit or loss account. So please once go through the question. So this asset was acquired on 1st October 2009, 1st October 2009 at a cost of $1 lakh and its remaining life was 10 years and there is no residual value. And the asset had been correctly depreciated up to 30th September 2004. Sorry, 2014. So up to 30th September 2014, the asset has been correctly depreciated. Now at that date, the asset was damaged and the impairment review was performed. So in 2004, that is on 30th September 2004, the asset was damaged and the impairment review was performed. Now on 30th September 2004, the fair value of the asset less cost to sell is 30,000 and they also gave information to calculate the value in use. So first we need to calculate the carrying amount. So now can anyone let me know how to calculate the carrying amount as on 30th September 2004? We need the carrying because fair value less cost to sell is given, that is 30,000. But in impairment review, the first step is we will compare the carrying amount with the recoverable value. In order to get the recoverable value, fair value less cost to sell, and we will be considering the value in use. So first we'll go with the calculation of carrying amount, then we'll calculate the recoverable value. So how to calculate the carrying amount? Computation of carrying amount as on 30th September 2014. Yes, how to get the carrying amount? Anyone? I hope I'm audible, participants. Add all expenses to the cost of asset? No. So we'll get the carrying amount by deducting the depreciation from the cost of asset. So here the cost of asset means on 1st October 2009, the cost of asset was 1 lakh. So from this we need to deduct the depreciation up to 30th September 2004. So if you deduct the depreciation from this, then the difference amount is considered as carrying amount. So less depreciation So here depreciation should be calculated from 1st October 2009 to 30th September 2014. And they also mentioned that the asset had been correctly depreciated up to 30th September 2004. So we need to deduct the depreciation. So what might be the depreciated value from 9 to 14 means how many years we should take? 10, 11, 12, 13, 14. 5 years depreciation is 10. So 1 lakh divided by life of asset is 10 years into, so the total depreciation would be 50,000. So 1 lakh minus 50,000, the difference amount 50,000 is nothing but the carrying value of asset, the carrying value as on 30th September 2000. Is it clear? I hope you understood the procedure. Is it clear? So in order to calculate the impairment loss, we need carrying amount and recoverable value. So for getting the recoverable value, we need fair value less cost to sell, which is already given in the question. So the fair value less cost to sell as on 30th September 2014 is 30,000. But we should calculate the value in use. Value in use amount is not given. That we need to calculate. So computation of value in use. So how we will be value in use nothing but the present value of expected cash flows from the asset is known as value in use. Once again I repeat, the present value of expected cash flows from the asset is value in use. So in the question it is mentioned that the expected future cash flows from this asset is 8,500 per annum and we will be receiving it for next to 5 years. And they also gave the present value factor for 5 years, that is 3.79. So the value in use will be 8,500 into 3.7. So 32,215 is value in use and fair value less cost to sell is 30,000. Now can anyone let me know what will be the recoverable value? What is the recoverable value? So recoverable value is nothing but the higher of these two. Yes, whichever is higher, that should be considered as nothing but the greater of these two or higher of these two is nothing but recoverable value. So recoverable value will be 32,250. So recoverable value will be 32,250. Then impairment loss. So here our impairment loss will be carrying amount minus recoverable value. So the carrying amount of the asset is 50,000 and the recoverable value of the asset 32,250. So 17,785 is nothing but impairment loss, which we show it in the statement of profit or loss. So this particular amount we will be accounting in the statement of profit or loss. So I hope it is clear, participants. If anyone have any question, please let me know. Is that clear? Yes. Yes, George, any query from your end? I hope the concept is clear. Yes. Now, in this impairment concept, next element is cash generating unit. Now, how to go with this impairment for the CGUs? CGUs are nothing but cash generating units. Now, these are nothing but the smallest identifiable group of assets which generate cash inflows independent of other assets. Nothing but these are nothing but the small assets which have the capacity to generate the cash independent of other assets. These are known as CGUs, nothing but the cash generating assets. Yeah, fair value less cost is the fair value and value in use. Yeah, it should be higher. We need to compare fair value less cost to sell and value in use. In these two, whichever is higher is considered as recoverable value. Is that clear, Chaitanya? Fair value less cost to sell and recoverable value, whichever is higher, that is recoverable value. So here also, let me show you. See, the value in use is 32,250. Fair value less cost to sell is 30,000. In these two, whichever is higher, that is recoverable value. So 32,215 should be considered as recoverable. Yeah. Then here I was mentioning about cash generating units. Now cash generating units are nothing but the small identifiable assets which is having the capacity to generate the cash flows independently. So how this particular cash generating unit should be considered for the impairment? Suppose example, if I take a college as an example, the Xerox machine or ID card printing machine or coffee machine, all these can be considered as a cash generating units because these assets will generate the cash independently without depending on other assets. But these are very small identifiable group of assets. Now, in case of cash generating units, we need to take same procedure of impairment we apply here. So first we need to compute the carrying value of all these CGUs. Suppose in an entity if 10 cash generating units are there, then we need to take the total carrying value of all these 10 CGUs. Then that should be compared with the recoverable value of all these 10 CGUs. So 10 CGUs are there. So first we need to take the carrying value of all these 10 CGUs. Then we should take the carrying value, recoverable value of all these 10 CGUs. So the difference between the carrying value and the recoverable value is considered as impairment loss. Suppose if the total of all these 10 CGUs carrying value is 1 lakh and the recoverable value of all these 10 CGUs is 60,000, the difference of 40,000 is considered as impairment loss. So in simple terms, how we can understand is instead of going with an individual impairment review, because every company will be having a group of the CGUs. So it is practically not possible to go for impairment review of each and every individual CGU. So that's why it is recommended to consider it as a pool. It means take carrying value of all the CGUs and compare it with the recoverable value of all the CGUs. The difference amount we can consider it as impairment loss. Now, in this case, IAS 36 states that after getting that particular impairment loss, we need to adjust the goodwill. Then after adjusting the goodwill, then we need to distribute the remaining impairment loss among the assets. So for your better understanding, here I will be taking an illustration. With that, I will be explaining how this particular CGU illustration impairment loss should be distributed among the assets. So here you can see this question number 20. So the net assets of a company, there is a company called Finkley. Now these net assets, cash generating units are given information. They gave the information regarding the CGU. So property, plant and equipment is 2 lakhs. Allocated goodwill 50,000. Product patent 20,000. Non-current assets, in bracket they gave that it is at net realizable value 30. And the total value of these CGUs is nothing but the total carrying value of these CGUs is 3 lakhs. Now here, as a result of adverse publicity, so there was some negative publicity about the company, and as a consequence for that, the company has a recoverable amount of only 2 lakhs. So they can recover only $2 lakhs from this, but actually its carrying value is 3 lakhs. So here the requirement is what would be the value of this company property, plant and equipment after the allocation of impairment loss. So the requirement is we need to calculate the value of property, plant and equipment post allocation of impairment. So this is the requirement. So first, the total value, but the total carrying value or we can also take. So the total carrying value of the CGUs are $3 lakhs less recoverable value is 2 lakhs. So the total carrying value is 3 lakhs and we are recovering only 2 lakhs from it. So the difference is 1. So this is nothing but gross impairment loss it is gross impairment loss. And I hope up to here it is clear. So after calculating the gross impairment loss, first we need to adjust. Nothing but we need to deduct goodwill. So here the value of the allocated goodwill is 50,000. So 1 lakh. From that we need to deduct 50,000. Then we will be getting a difference of 50,000. This is nothing but net impairment. Any query up to net impairment loss? Participants, please, if you have any question, let me know. Is that clear? So the total carrying value of the CGUs is 3 lakhs and the recoverable value is 2 lakhs. The difference 1 lakh is gross impairment loss. From that, we just deducted the goodwill value. So always we need to deduct goodwill from the gross impairment loss. So 1 lakh minus 50, the net amount of 50,000, we recognize it as net impairment loss. Is that clear up to now? Yes. So can I expect your response to that first? Yes. Thank you for your response. Now, this particular 50,000 should be distributed among the impaired assets. So this impairment loss of 50,000 should be distributed among the impaired asset. Now here, what are the impaired assets? We are having four. Normally, if the carrying value or if the recoverable value is less than the carrying value, if the recoverable value of an asset is less than the carrying value of an asset, we consider it as impaired asset. But in this case, if you see these non-current assets, the non-current assets is at net realizable value. It means its carrying value is equal to its net realizable value. Its carrying value is equal to net realizable value. So that's why we cannot consider this non-current asset as impaired asset. Once again, I repeat, if the recoverable value of an asset is less than the carrying value, then we should assume it as impaired asset. But in this case, among these four assets, net current assets value is equal, that is nothing but its net realizable value is equal to the carrying amount. In bracket, they gave it. So that's why we cannot consider this net current assets as impaired asset. Then we left with three assets, that is property, plant and equipment, goodwill, product patent. Already we adjusted the goodwill amount because here we can see this. Out of what from total gross impairment loss, we adjusted the goodwill. Then we finally left with only two assets. One is property, plant and equipment, and next one is product patent. Now the requirement here is what would be the company property, plant and equipment after the allocation of impairment loss. So first, for calculating that, so the carrying value of property, plant and equipment is 2 lakhs. From that, we need to deduct impairment loss. So here our net impairment loss is 50,000. So please see this calculation. 50,000 into. Now this 50,000 should be distributed between property, plant and equipment and product patent. So 2 lakhs divided by my screen is on hold. Actually, I'm sharing my screen. Do everyone facing the same problem? Okay. Yeah, yeah. Chaitanya, I think if you can try to reconnect once, then I think this issue might be resolved. Okay. So impairment loss. Yeah, definitely. I will be repeating it once again. So our total net impairment loss is 50,000. I hope this is clear for all. Now this 50,000 should be distributed between property, plant and equipment and product patent. Why only these two? Because net current assets, its net realizable value is equal to the carrying value. So that's why we cannot consider it as a impaired asset. And we already adjusted the goodwill. So if you eliminate this net current assets and goodwill, we left with only property, plant and equipment and patent. Now here question is what is the impairment loss after, what is the value of property, plant and equipment after adjusting the impairment loss? So 50,000 should be distributed between property, plant and equipment and product patent. So just try to see the formula here. 50,000 into 2 lakhs. 2 lakhs is nothing but the value of property, plant and equipment divided by total value. The total value of property, plant and equipment and product patent. So 2 lakhs plus 20,000. So by substituting this particular formula, we got an impairment loss of 45,454.5. So after deducting this impairment loss, that difference, that is 1,54,545, is nothing but the value of property, plant and in simple terms, whatever the 50,000 impairment loss, whatever the net impairment loss is there, that is distributed between property, plant and equipment and product patent proportionately. So we just proportionately distributed this particular loss between these two assets. So the value of PPE after adjusting impairment loss is 1,54,545, which we record in the statement of financial position. Is the clear participant? The query? Can you see my screen, Chaitanya, now? Here a small illustration. We please try to do this one. So I hope you can see this particular question. A division of an entity has the following balances in its financial statements. So here you can see goodwill, plant, building, intangibles, other net assets. Following a period of losses, the recoverable amount of the division is deemed to be 4 million. A recent valuation of the building showed that the building has a market value of 2.5 million. The other net assets are at their recoverable amount. The entity uses the cost model for valuing the building and plant. So here the requirement is calculate the value of plant after adjusting the impairment. So here you need to calculate total impairment loss, and from that you should adjust the goodwill, and whatever amount is left, you need to calculate the value of that particular plant. So you should calculate the value of the plant. So will you try this? It is same like it is just same like the problem which we just solved. So first thing is we need to get the carrying value of all these assets. From that we'll deduct the recoverable value, and whatever then we get gross recoverable value. Sorry, we get gross impairment loss. From that we'll be deducting the goodwill, and we get net value. So that net amount should be distributed among the impaired assets. So my question here is calculate the value of plant after adjusting the impairment. So will you try? I will give 5 minutes time. So please try. I hope you just started trying. What will be the total carrying amount, participants? What is the total carrying amount? Yes, did anyone got the carrying amount? Total carrying amount of the CGUs? Final answer option C. Here I didn't show the question, Paul. Here my question is this one. So this is the question. What is the final value of plant which we need to show? Okay. So here what I am expecting is just try to calculate the total carrying value. Okay, just I am putting it in Excel sheet. So the total carrying value here we need to take the assets, all assets, goodwill 7 lakhs plus plant 9,50,000, then building 23 lakhs, then intangibles 8 lakhs, then other net assets 4 lakhs 30. So the total carrying value is 51 lakh 80,000. Nothing but 5.18 million. From this, we will deduct the recoverable value. So the total recoverable value is 4 million. 4 million, nothing but 40 lakhs. So the difference amount that is 11 lakh 80,000 is nothing but gross impairment. So participants, I hope it is clear up to now. Is it clear? From this, we'll be deducting the goodwill. Yes. Now we need to deduct the goodwill. So goodwill amount is 7 lakh. So the net amount 11 lakh 80 minus 7. So the net amount is 4,80,000. This is net impairment loss. Now my question is, after distributing or after adjusting the proportionate net impairment loss, what will be the value of plant? Now here you try to understand. Anyway, we excluded the goodwill. Now we left with four assets. One is plant, building, intangibles, other net assets. Now here there is an adjustment. Let's try to observe this. A recent valuation of the building showed that building has a market value of 2.5 million, but its carrying amount is 23 million. Sorry, 2.3 million, but its market value is 2.5 million. Now, if the market value is more than the carrying value, definitely it is not a carrying, it definitely it is not an impaired asset. In order to consider an asset as impaired asset, its recoverable value should be less than the carrying value. But in this case, its recoverable value 2.5 is more than the building value, carrying value, that is 2.3 million. So that's why we will be excluding the building also. Then there is one more adjustment. The other net assets are at their recoverable amount. It means the other net assets is equal to their recoverable amount. So we can eliminate this other net assets also, because it is also not a impaired asset. So among these five assets, now we left with only two assets. Now there are only two impaired assets. One is plant and the other one is intangible. So this 4,80,000 proportionately distributed between plant and intangibles. I hope it is clear, participants. Now what will be the value of plant here? So plant is 9,50,000. From this we will be deducting impairment loss. So just see the calculation. What is the net impairment loss? 4,80,000 into the value of plant 9,50,000 divided by total, that is plant plus intangible. So 9,60,50 minus this impairment loss. So the final value of plant, which we need to take it in the financial statements. The value of plant which we need to show it in the financial statements is 6,89,000. So Paul, you guessed right one. So option C is the right one, right? So 6,89,429 is the plant value. So participants, any question on this? Please let me know if you have any query.